Hello, everyone, and welcome to a very special edition of the Trader's Mind Chat Show. Today, we are doing a presentation on the trading mind wheel, the 8 essential skills that are needed for trading mastery. Let's pull up the slide deck here. This is something that we're going to be doing regularly. We're going to be doing this once a quarter for everybody. So that way you have the opportunity to not just go read books, study, come in and uh, you get to come in and ask questions, learn some more. But this is also geared for people that maybe haven't heard about any of this stuff. If that's you, and that's probably most people out there, that's okay. We're going to walk through all of the skills that you need for trading mastery today. We're going to do a big overview as we go through this. We're going to be here for a while. I want you to ask questions as we go. I also want you to grab your notepad, grab a pen, get ready to take a lot of notes because I've got some great stuff in store for you today. So let's jump right into what we've got going on here. So, introduction. Overview of the trading mind wheel concept. Well, what is a mind wheel? And why do I have a picture of a bicycle here? Well, what's this funky diagram over here? The idea is that there's certain skills that are needed to trade well, that there's certain skills that are needed for trading mastery. And I learned this the hard way. Well, like many of you out there, I'm sure, have attempted to learn things like technical analysis and then maybe fundamental analysis. And maybe you pick up a book somewhere and you learned a little bit about risk management. I did the same thing. But I learned a little bit over here, a little bit over there, a little bit over there, and it took me years and years and years before I finally gained all of the different skills that I needed. I didn't even know what skills I needed in order to trade successfully. I just thought that, hey, maybe you need technicals or maybe you need a little bit of risk management. I didn't know about there being 8 of these core skills, and we'll go through all of them. When you do have all 8 skills in place, then you have a nice bicycle that you're ready to go and ride in the park. When you don't, you'll end up with something much worse, which we'll get into. So, the general philosophy of the trading mind wheel, the importance of beliefs, and beliefs is at the center of the mind wheel. It's at the center of the mind wheel for a very important reason. The reason why is because everything, all the other core competencies or core skills, they all involve our beliefs. So let's just say, for example, that this one right over here where my mouse is, journaling. Let's say that you don't really like journaling, you think that it's a pain in the ass, and you don't want to do it. Well, you have a lot of beliefs about that particular skill, right? Are you going to be doing it or are you not going to be doing it? If you think that maybe you think that it's a pain in the ass, but you're going to do it because it's important. Well, that's one set of beliefs. What about the person that thinks, you know what, I don't really need journaling because my broker logs all my trades. I was that guy for a long time. Do you think that person's going to have a tough time with journaling? If that's you, type it into the chat. Let me know. I'd love to hear who's watching and where we're all at. But it should be obvious that the person that thinks that it's a pain but knows that it's important has a much better chance of actually doing it than the person that thinks, this isn't important, and then they get left behind. So beliefs are at the center of it all. We have beliefs about everything. We have beliefs about trading. We have beliefs about money. We have beliefs about ourselves. We'll get into all that during this live stream as well. But we also have beliefs about all of the other skills, journaling, analysis, all of them. Now, when you have limiting beliefs about certain skills, you end up like these guys up here in the upper left-hand corner here, right? You end up, you could be great at technical analysis. You could be great at fundamental analysis, but without mindset, without all these other skills, then you're going to be pulling a cart with square wheels and it's not going to get very far. You're going to struggle and you're going to struggle for a long time. And that was me. That was me. And I'm trying to help you to not have to go through this. If you have mindset at the center and you start to build that axle and then develop all the skills around it, that's when you're going to be able to be in a position to ride the bike on a nice clear day. So there's 8 essential skills in the trading mind wheel. The first one is mindset. So let's go into that one. I see a question come in. I'm just going to read this question real quick here. And by the way, I want you guys to participate as we go through. So if you're just hopping on, go ahead, type into the chat. Let me know where you're from and how long you've been trading. If you've read the book or not, go ahead, do that now. And I'll read Darren's question here. So Darren says, I want to improve my journaling. The thing I'm working on now is creating a journaling system that works for me, but also hits the main things I need to journal to improve and reflect. Yes, well, we're going to go through some of the basics of journaling in today's live stream. Absolutely. All right. Just coming over here. We're streaming all over the place. We're streaming to Instagram and to YouTube, to Rumble. And I'm paying attention to all the chats. So as you guys have questions or want to make comments, just go ahead, put them right in. Anyhow, back to this. So, mindset. What is mindset? A lot of people think that it just has to do with your emotions and emotionality. Those things are certainly part of it. And that's what I thought mindset was for a very long time, too. But mindset actually includes a lot more. Mindset includes your beliefs, your belief systems, your emotions, and your habits. So, in that way, mindset is all encompassing. And that's why it's right at the center of the mind wheel. And that's why it bleeds into all of the skills that are here. It's also why we want to continuously revisit our beliefs and our belief systems to make sure that they are continuously helping us get to where we want to go. Here's a big mistake that I made for a very long time and then made the same mistake again. Beliefs, or a trading system, I should say, works well if you have these 3 things. It has to align with your beliefs, it has to align with your goals, and it has to align with your ability to execute. When any one of those 3 are not in sync, you're going to run into problems. So, it took me a long time to figure that out. It took me about 10 years before I finally figured out any of this stuff. And then I was rolling pretty well for a while. For those of you that don't know, I was in the IBD, Investors Business Daily, New York City meetup for about 10 years. Uh, and I led it for the majority of the time that I was in that group. So I'm in that group, I'm doing well, my equity curve is on the rise, and then my daughter was born. Best thing to ever happen to me. But that shifted how I would trade. And it didn't dawn on me at the time. I thought that my system was intact. I know what I'm doing. I know how to execute. I know all about risk and trade management and all the things that we're going to talk about here. But the thing that I didn't consider at the time was how it would affect my ability to execute and what new beliefs were coming in too, because I wanted to be a great dad. I wanted to be there and be there in the night. I wanted to spend a lot of time with her. And I had quite a bit of conflict. And what would normally take me a couple of hours ballooned into taking me half a day for my trading. I went through all kinds of rough cycles there. Equity curve started to bounce around like a ping pong ball. I started to put on weight. I got stressed, and it wasn't good for me. It wasn't good for my family. The problem was that my trading system no longer matched my beliefs, my goals, and my ability to execute. I had to go back and revisit those elements and get myself back into alignment before I would be able to improve. And thankfully, about 6 months in, after struggling with that, it dawned on me and life got better. So, for those of you that are serious and want to take the first step, there's a lot of steps in the Trading Mind Wheel book, but we'll touch on one here and now that everybody that's watching can um, go and take away. And whether you end up reading the book or not, you can do this here. So, for those of you that are serious, here's mindset exercise step one. First, I want you to block out an hour on your calendar. Block out an hour on your calendar for this. And during that hour, it's total tight bubble of focus that you're going to have. I want you to list out your beliefs. List out all the beliefs that you could think of, all the beliefs that you have about trading, all the beliefs that you have about money, and list out your self beliefs as well. That's going to be very helpful in starting to generate awareness around all these various elements. Next, when you're done with that, I want you to list out your trading goals, all the different trading goals that you have. Maybe there are a lot of people that are starting out. You happen to be one of those. A lot of you have goals about making lots of money. A lot of you have goals about making great returns. I do too. But we also have other goals at play. We also have goals about how much time we want to spend trading. We also have goals on what we want to be able to do with our trading. We have goals on when we want to trade. Maybe we want to only trade at a certain time of day. Maybe we only want to be alerted at a certain time of day. Maybe we only want to do our research and analysis and our studying at a certain time of day. All these things can play a factor. So write all those various goals, objectives down. The next thing that you're going to do, which is step four, right? And or subsection four, part of step one here, is to highlight any belief that you wrote down in the beginning that is in direct conflict with your goals. Some of them will be aligned, some of them won't be aligned. You want to highlight all the ones that are in conflict with your goals. Now, once you have all of them highlighted, now it's time to go and question those beliefs. Because then you're going to start to gain more and more insights. You're going to start to figure out, well, what happens if this belief that I have about trading or money or about myself, what if I held on to that belief? Am I going to be able to get to my goal? Well, it's in conflict. Probably not, right? What happened if you don't do anything and you just hold on to this set of beliefs for 6 months down the line? What's going to happen if you hold on to that same belief for a year, another 5 years, another 10 years? What's going to happen? Going to be at best you're where you are, but are you really going to be where you are? You're going to be a lot more frustrated and thrown in the towel, getting upset with yourself, with others. It's important for us to become aware of our beliefs, to question our beliefs. And it's not that the beliefs themselves are necessarily good or bad. They might have been good for us at one point in our life, but it's just like running old software, right? Like you on your computer, if you have old software that's running in the background, it could be slowing everything else that you want to do down. So it pays to go in and reevaluate, reassess, make some upgrades, right? That's what we're doing here. So let's talk about the next skill in here, journaling. want to talk about journaling first because for one, most people disregard journaling, think that it's unimportant. But secondly, if you get your journaling set up correctly, it's going to help you with many of the other skills because journaling is step one of continuous improvement, step one of accountability. So you want to have it set up and you want to have it set up well. And that's the role that journaling plays in successful trading. It'll be very difficult for all of us to make any kinds of improvement if we're not actively tracking what it is that we're doing. And by actively tracking, I don't mean just having a broker statement and looking at that every once in a while if you're doing really good or if you're doing really bad. That's not what journaling is about. Journaling for trading is about getting your fists in the dough, right? Like if we were making a pizza, yeah, you're getting your fists in the dough and you feel the texture of it. You know what's right, what's wrong. As things can evolve and things start to become automated. That's what journaling, if done well, if done properly, can really do for you. Now, there's a lot of different ways to journal, and I've done it all. From what you saw before in that picture with pad and paper journaling, I have my journal in my file cabinet over here, an old one that's a printed out charts and this three ring binder. It's about yay thick. um, and then I switched over to software. Some of these softwares, I switched over to spreadsheets and went back and forth and back and forth. Eventually, I settled on spreadsheets. Now, I'll share why I settled on spreadsheets, and part of it had to do with the data and the thoughts and how I wanted to capture those things. Well, the benefit that I found in spreadsheets was that if as I evolved, right? So we talked about beliefs and upgrading beliefs. So as my trading evolved too, there were new things that I wanted to start to track. In the beginning, when you're starting out, there's certain things that you're going to want to track, and it's outlined really in any of these tools. And I'm sure there's, but to just mention it here, things like the ticker symbol that you're trading, the date that you entered, the price that you entered, the price where you exited, how many shares of this thing that you bought, all stuff like that. As I evolved, there were more things that I wanted to track. I wanted to track the high watermark in my trades. I wanted to track the low watermark in my trades. You might be listening to this and say, well, what in the heck is a high watermark? Right? For those of you that are wondering, a high watermark is just how high did the trade go while you're in it. And the reason why I found that to be so important is because market cycles change. And so in a very strong market cycle, my trades will go a lot further, right? That makes sense. In a weaker market cycle, my trades aren't going to go as much. So if I try to do the same thing all the time, manage trades in the same way all the time, I'm going to miss out on both sides, right? If I'm trying to hit home runs when the market is chopping around, then I'm going to miss out on the smaller gains that I could have had if I was aware that the market's plateauing. Same thing on the other side, right? If the market is running higher and I'm just going for these little tiny base hits, that's when you look up and it's like, man, that stock just ran 30, 40, 50%. And here I am with a 5% gain. Understanding high watermarks, understanding your statistics and those kinds of things, all that is important. That's where journaling can really come into play. It's all very helpful. I like to use spreadsheets. There's some of these tools here, like Edgewonk. Edgewonk is one that I used for a while. My buddy Rolf Schlotman that runs tradeciety.com, he came up with that one. A few people that I know use it. I think that it's a good tool. Personally, I haven't used it in several years, So I'm sure that he's made upgrades to it, but that one at the time was fantastic. Then TradeZella. Well, why is TradeZella here? I haven't used TradeZella, but it's one that that I've seen quite a bit from on social media, and I have spoken to the founder, um, Umar Ashraf, as well as his brother Usman. Both of them are brilliant guys, and so as far as visually appealing, I think that both of them are visually appealing. At the same time, I wouldn't give up my spreadsheet. Not because the spreadsheet is free like that. That's one benefit, but it's not really about cost for that, right? Because both of them, I think, are fairly inexpensive. The more important thing is what journaling tool is going to serve you the best. For me, it happens to be spreadsheets because of the flexibility, because I could add things to it as I grow. I could add whatever I want in a snap. But if spreadsheets aren't your thing, you have a couple of software choices there for you. And if you're a pad and paper guy, that can work too. Any thoughts or questions here? Keep rocking and rolling. And there'll be time for lots of questions at the end too. Just scrolling through Instagram here. Every time that somebody joins from Instagram, it shows up in the comments, and that's a little annoying. It's great to have there's a lot of people over here on Instagram. I appreciate you guys coming in, but it also makes it a little bit more challenging to keep up with the comments. All right, so looks like we're good to go here. Next up, analysis. Very important skill for trading success, for trading mastery. Ah, wait a minute. Here comes a question from Jake P. Jake P says, any thoughts on how to journal your thoughts and reasons why you took the trade? Thank you, Jake. That's a very good question. So, the way that you would journal, or I'll share with you the way that I do it, right? Because there's loads of ways to do it. I'll share my way, and then I'll share a few more thoughts on how you could do it. And it's ways that I used to do it, but the way that I do it presently, I journal my thoughts and the reasons that I take a trade. That's one of the reasons why I love doing it on spreadsheets, because in a spreadsheet, I have a row for, go back a slide. I have a row for my ticker. Actually, why don't I bring up my journal? And you could see some of my journal here. Give me one second. All right. So hopefully you could see this here. I just grabbed my journal, some of my closed trades over here, and you could see the ticker. You could see the date of the entry, some other notes about it, entry notes. So the entry notes are going to have some thoughts and feelings about what I'm seeing and why. It's personal, right? That part's going to be a little bit different from everybody. Uh, then I like to score my trade, so I'll grade it. I have this other tool called the Trade Gauntlet that I'm generating a score for the trade, so that's there. I track a whole bunch of stuff, but basically, you want to have a row for the ticker that you're considering. Write in whatever notes that you want on that. Now, you might be saying, well, what about my general emotions for the day? Well, let's say I woke up on the wrong side of the bed. How do I keep notes on that? Very good question to ask. There's two ways that I think that you could do it. Two solid ways. One way is to keep a personal journal, right? So maybe you have a notebook that you're journaling your thoughts, and there's something kind of magical about putting pen to paper versus typing things up. So for personal journal, pen, paper, write in a journal every day, make it a habit. Block out just a little bit of time for it. Maybe you're doing it at the beginning of the day, maybe you're doing it at the end of the day, maybe you're doing it at both times of the day. Just block out 5 minutes at least to journal out your thoughts at that point. Maybe you keep that journal sitting on your desk. And as you're going through, you could write about it. As you make it habit, then it's something that starts to become more automated. In the beginning, when it's not a habit, you might find that it's difficult. You might find that you miss doing it a few times. Expect that that's going to happen, but give yourself multiple reminders to do it. Make it a habit. You could have reminders as sticky notes. Personally, I like to put reminders on my phone, not just on my phone to get alerts. Right, I don't like those kinds of reminders, but I will put it right on the right on the desktop, right on the wallpaper of my phone. Because how many times do we look at our phones each day? Right, it's good to have reminders like that. Ways to hack our environment. So you could keep a journal that way. You could also journal your thoughts and ideas and emotions in your software. For me, it's a spreadsheet. And these ones here, whether it's Edgewonk or TradeZella or whatever other one you find, uh, most of them have a spot for freeform notes, and you can do it there as well. All right, so let's talk a little bit about analysis here. So analysis, one of the 8 essential skills. Most people, well, when they hear about trading, that's the only skill, right? And if you Google how to trade stocks or how to trade crypto or how to trade whatever, analysis is going to be number 1, and it's probably going to be one of the only things that gets talked about. It's it is important. It's one of 8. So, analysis. Well, what is analysis? I look at analysis as two different things. I look at it as analyzing the trade, right? Like the thing that we want to trade or buy or sell, whatever. And then there's the market, the environment in which we're buying. And so, because there's this various types of things to analyze, there's also going to be various types of analysis that's important. You might have some fundamental analysis, you might have some technical analysis, and you might analyze the market. And there's different things to learn along the way. So, up here, I have a screenshot. The screenshot is of a tool that I use called MarketSmith. The only reason why, well, one of the main reasons why I like this MarketSmith tool is because you can see that there's a whole bunch of data right here. It's giving you the earnings and the sales and the growth rate of the company, things like that. It's giving you some of the top competitors, the fund ownership. Those types of things are important to me. So that's why I like to use that tool. It makes it very convenient to look at a lot of the stuff very quickly. Then down here, I'm looking at TradingView. TradingView is great for charts. It's another piece of software. That one, there's free versions, there's paid versions. I use the paid version. I think I use the Pro Plus level of TradingView for anybody that's interested. And then this chart down here of that's the Nasdaq. That's also in Trading View, and you start to see some color coding on there. You might be thinking to yourself, "Well, what? Why is this guy coloring his charts out like this? Oh, what's this red, yellow, green thing about? Are we sitting in traffic?" Well, yeah, in a sense, we kind of are sitting in traffic. When the way that I look at the market, and I'll share with you before we get into this next slide, where we get a little bit deeper into this. I used to favor the general market analysis way too heavily. So for those of you that are familiar with William O'Neill's work and Can Slim and Investors Business Daily, the paper and the philosophy would heavily weight the major indexes and the general market condition, right? And so you would either be in a confirmed uptrend, the uptrend would be under pressure, or you would be in a correction, and there would be certain things that would flip the script, so to speak. And how you would behave would be different depending on the type of market environment. And so you're looking at the indexes to help be a guide for how aggressive you should be, how you should manage your positions. And I was favoring what the indexes were doing versus more than what my trade was doing. Now, for them, that might be more important because they're not just dealing with individual accounts like I was at the time, right? Well, when I first discovered IBD, I was trading 10 grand, right? They're not trading 10 grand. They're trading however many millions plus their own portfolio management, right? Hundreds of millions of dollars in the works. There I am trying to be like them, trying to trade 10 grand. So it's a little bit different the footing that we're on, right? So how can we adapt? The general market was less of a concern for me because I'm able to move a little bit quicker. They might not have been able to. So here was my adaptation. I like to think of the market in a holistic way. How do I get this holistic approach? Well, I'm not going to favor one element more than the other. I want to take a look at all things and come to a conclusion. I want to try to be as unbiased as I can, given my own biases, if that makes sense, if you understand. So, what's this holistic approach? And how, more importantly, how can you use this holistic approach? Well, there's really three things to consider when you're thinking about the overall market. There's the general market, the environment in which you're buying. There's your system, the thing that's going to tell you what opportunities there are. And then there's your personal performance, which are what did the things that you actually bought or sold, how did those do? And that's going to give you great insights into should you be stepping on the brakes or maybe you should be more aggressive because everything's working. That's how you get a personalized view. That's how you get a personalized approach. And looking at the market in this way can really, really help you with your position sizing, with your risk, how you're going to scale out, right? Like how we mentioned earlier, where if the market is trapping sideways, you're not gaining a whole lot of traction, that maybe it's time to start taking your gains a little bit quicker. And maybe if you're in a rip roaring market where everything is going, that could be a signal to you to start to let some of your profits run a little bit further, bank a little bit more money that way. All these things, very important. And it's a great way to analyze markets. Any questions there? Any questions there? I'm going to take a quick sip of water while I wait for the chat. All right. Looks like we're good to go here. I saw some comments coming in from Instagram. Somebody said, read my comment. You're going to have to, if you're over on Instagram, you're going to need to post your comment a couple of different times. And the reason why is because every time that somebody joins in from Instagram, it sends the comment scroll higher and higher. So I apologize for that. Go ahead, post your comment again. Or you could switch over to YouTube and it just populates right here on the side. Makes life a lot easier. Anyhow, let's keep going. All right, next up, risk. Let's talk about risk here. So there's a couple of different ways to think about risk. There's our initial capital risk. How much money are you going to risk on the individual trade? There's your position size. How much of your capital are you going to put into this thing? And then you want to think about the potential reward that you have in relation to what it is that you're risking. Let's say that you have $100,000, right? And this is a position size calculator that we have up over here, right? In fact, well, why don't I temporarily make my face a little bit smaller over here, so that way you can see this. This is very good. So this is the position size calculator. It's free. It's on marrowwealth.com. You could go ahead and test it out right now if you want. What this does is you put in how much money you have, what you're willing to risk of that capital, where you enter, where your stop is, and it's going to tell you how much money you're going to have left after that. And then it's going to calculate some results for you. And what it's going to give you is this here. It's going to tell you the exact number of shares you're able to buy. It's going to tell you your position size, how much money you're risking per share, how much percentage you're risking on the whole position, right? So in this case, we're risking about 4.5%. It's going to tell you how much money you're risking overall. You're risking about $1,000, 1% of 100,000, right? Pretty simple there. But this helps significantly in doing the math. And there's also that other thing right over here, this trade emotionator. It's letting you know that you're in the sweet spot. Well, what in the heck does that mean? Sweet spot, trade emotionator. What that means, I'll make my face a little bit bigger now. So, what the trade emotionator is helping us do is avoid crazy overnight risk. If you're a day trader, you don't have overnight risk. You could have much larger sizes. You could put the majority of your account into one trade and exit the same day and not have overnight risk where if you're a swing trader like I am, if I were to take the majority of my account, put it into a single trade, I'm very confident in it. Maybe the trade itself, the distance between my entry price and where I plan to cut that loss, if I'm wrong, maybe it's very close. Maybe it's only 1 or 2%. And I go in with the majority of my account. And let's just say that the trade starts to work and it starts to climb higher and higher and higher. Let's say at the end of the day, I'm up 5% on this trade and feeling pretty good. Maybe I'm even able to get my stop to break even or a little bit better. Well, guess what? If my if the majority of my accounts in the trade, I'm still subject to overnight risk. Now, what's overnight risk? That means the risk of a stock gapping down dramatically. Sometimes stocks gap down overnight. Sometimes you might wake up and the stock might be down 20%, 30%. It's happened. If you have a reasonable amount in the trade, it'll hurt, but it's not going to kill you. If you have the majority of your account in the trade, then it's going to hurt a lot worse. You don't want to be in that position. I've been in that position in the past. It's not fun. So that's what the trade emotionator part of this tool. It's unique. Uh, it's on marrowwealth.com. It's free. Go try that out for yourself. Any questions there? Have some coffee. All right, next up, the 8 essential skills, trade management. We're up to trade management. And by the way, we're just doing the basics of some of these. If you want to dive deeper into this, my book is about 240, 250 pages long. And so, of course, well, we're not going to be able to do everything, but hopefully this gives you a great jumping off point to start to understand the different types of skills that are needed for trading success. And you could start to read deeper into my book, into other places as well. You don't have to get everything from me. The whole point of us doing this here, and really the whole goal of what I'm trying to do here with Marrow Wealth, is to help you guys become 5-star traders. Well, what does that mean? Oh, to have a 5-star year. It's going to mean different things to different people depending on where you are in your journey. But you come to that conclusion for yourself. Well, what would it be? What would a 5-star year look like to you? And then to start to think about those elements too. Well, we did videos on that already about 5-star years. I don't want to go too deep into it here, but that is the goal. And whether I'm able to help you do that, whether somebody else is able to help you do that, the goal is to help you get to where you want to go and help you get what you need to get there. Back to this. Trade management. Trade management is one of the 8 essential skills, and I want to share with you a bit about how I like to manage my trade. So again, I'm going to make my face a little bit smaller here. Let's go through this section here. So I like to break trades into 4 distinct areas: the beginning, the middle, the end game, and then the final end game. It's kind of like a chessboard where you're first starting out, then you're developing your pieces, then you have the war in the middle, then you start to eliminate a lot of pieces, and then at the end of the game, you have just a couple of pieces left on the board. In the beginning, my first objective, 2 objectives, right? Get my initial capital risk off the table. So when we were talking about risk earlier, that initial capital risk, that in that example, that $1,000, I want to get that to $0 at risk as quickly as possible. And the way that I'm going to be able to do that is by getting my stop to break even. That's objective number 1. The reason why is because whatever you have at risk on the trade, right? Whatever you have at risk on the trade, that is money that can go back into your pocket or be refunded or be redistributed into the next trade that you take the moment that it comes off. That's why you want to have that as part of the first objective. That's why it's my first objective. I'm going to get that risk to 0, and then I can use that to finance the next trade. And not only that, if I get the risk off the table quickly, and then it's less heavy lifting that any future winner needs to do for my losses. So let's say that you have a string of losses. If you have a string of losses of, say, 5%, that might hurt a little bit, right? What happens if you're able to cut that to 4% or to 3% or 2% or ideally 0%? Far less heavy lifting for your winners to do, right? So the more that you're able to get your risk, that initial risk off the table, the better of a time you're going to have. So that's my first objective. And also in the beginning, I want to get the trade to my first scale out. For me, my first scale out is typically equal to the amount that I risked on the trade. Yeah. So a couple of questions come in here. Let's see. One is from Jai Wei. How do you trade crypto recently? Feels so hard to trade it. Well, Jai Wei, we'll get to questions of that nature where it's not related to what we're talking about right now. We'll get to those towards the end. For now, I just want to keep it topical to whatever's on the slide. But we'll talk about crypto and what I do with it after that. Okay. Next question from Trader Help 101. Break even is better than losing. Yeah, absolutely. I would rather have 20 break even trades than 5 losing trades, right? Because 5 losing trades is bring you in the wrong direction, right? Then you have to go 5 more and then another 5 to win the tug of war, right? It's kind of like a tug of war. Even if you have one really strong guy on one side, that being the winning side, if you have nothing that he's pulling against, it makes it a lot easier than having a few dozen small losses. All right, so that's the beginning of the trade. Next part is the middle trade. Well, what I call the mid game. What am I doing during the mid game? What I'm doing there is if my stop is not ready to break even, then my stop is at break even. That's how the middle of the trade. And then the next objective, the next profit objective is to get to my second scale out. For me, that's going to be whatever my average gain has been over the past 10 trades or so. Sometimes, if we're in a rip roaring bull market, it might be 15%, it might be 20%. In a choppy environment, it might be as low as 6 or 7%. So I'm looking to piece out of the trade based on that. Next, the end game. Right? This is where my stop is starting to raise above break even. And I'm actively looking to take my third scale out of the trade. So you might notice already too that I'm not doing all of my selling in one shot. I'm selling out on the way up. And that's one of the things that's going to allow me to both be in a trade and take gains quickly, but also allow myself to be in for the longer moves. And the longer moves will happen whether if you're in a strong market environment, you'll have the longer moves. If you're not in a strong environment, then we're going to be more so over here or more so over here. And we get to dynamically adjust. Then the final end game, which is allowing the last piece to run. The main point that I want to leave you with for here, I know that trade management can be a little complicated. The idea is that we don't need to make all or none decisions. If you walk away with nothing else from this section, walk away with that you don't need to make all or none decisions, and that objective one, get that initial risk off the table. That way it could allow your winners to work more and harder for you. That's the idea. And you want to make these things part of your plan. Plan it out ahead of time. In fact, I was talking to one of our members earlier today. I plan out my entire trade ahead of time. So before the trade is even executed, I already know where I want to take both my first scale out and my second scale out, and I already have an idea of where I want to take my third scale out as well. But I have the orders for both the first scale out and the second scale out placed with my broker before I even execute the trade. Now, if the trade falls apart, then I just cancel the order. But before the trade gets executed, all that is already set up and I don't have to think about it. It makes it that much easier to make sure that I'm selling into strength along the way. Next up, portfolio management. Take a look at that slide. Isn't that beautiful? Portfolio management talks about a few different things. Portfolio management talks about the big picture and assessing portfolio heat, the total risk to our trade. Like you're in a pressure cooker or a boiling pot, lots of fire on your portfolio. How do you make sure that your heat stays level? Where you're not going to be bubbling over and not have your dinner. Portfolio management also talks about how you're going to balance individual trades. How are you going to make sure that you're not overly invested in one particular sector or one particular industry group? Because sometimes an industry group or a sector could get hit all at once. And let's say that you find four, five, six trade ideas that are all sitting up at the same time, and they're all in the same group, and then they go and they start to move. You might feel great. When that's working, it is great. Sometimes a group or a sector can get hit all at once too, and we want to be aware of those scenarios. And that's where tracking your the sectors and the industry groups that your stock belongs to matters. This is a screenshot from TradingView. They make it very easy to do it. You just click a button and it shows you these pie charts of what it is that you're in, how much. But let's talk for a moment about portfolio heat and how you can adjust it. So, portfolio heat. Portfolio heat is the total amount of risk that you have in the market at any one time. So, let's say, go back to the earlier example where we took a trade, we wanted to risk 1%. You take that one trade, your portfolio heat at that time is 1%. Simple enough, right? Let's say that you took four trades. Each of them, you're risking 1%. Your total portfolio heat, 4% at that time. Your portfolio heat is what would happen if every single trade just got slammed and you're stopped out. What would be the effect to your portfolio? You need to know that number at all times. If you don't, you're going to be caught off guard and you'll be far more likely to trade emotionally. It's a good number to be aware of, especially in the beginning, especially when you're just starting out, because at that point, you're not quite sure. You are far more likely to act emotionally. Know where portfolio heat is at all times. See a bunch of questions popping in here. Let's read some questions. All right, the trade management part is the part that I want to practice this year. Sometimes let trades run up 10% and then it's fallout to break even. I'm out of the trade, but I still feel bad because my feeling being stuck with 10% profit. I think this speaks to actually the full trading mind wheel. Even though it's part of the trade management, it's how everything works together, right? So how do we generate awareness? How do we know if we should be taking our gains quicker or if we should be letting our trades run? Part of it's analysis, part of it's the environment, but how do we know where we're at? Part of it has to do with journaling, right? That's how all these skills start to work together. And also, if you are actively tracking all this stuff yourself, this is how you're creating your own personalized mind wheel, your own personalized bicycle, to stick with the bicycle analogy that we had earlier. Or you might be like, hey, I want a customized suit. You could buy a suit off the rack, but if you have a nice custom suit, that's what we're building here for you. Jawway has a question about the OCO orders. Do you place OCO order? Yes, I do. If so, upside is capped. How do you let the rest run? Very simple. I decide ahead of time how much I want to sell into strength. So, depending on the market environment, I might take only 10% of my trade off at the first scale out. If things are choppy, I might take half my trade off at the first scale out. That's how I'm dynamically adjusting. Um, Looking at personal performance, my using the journal, using how I'm going to manage that trade, and how that trade is also going to be managed relative to the rest of my portfolio. That's how all this stuff starts to work here. Just going to scroll through Instagram to see if uh, anything's coming up here. Someone's asking about giveaways. Yeah, no, I don't do giveaways well with prop firms. I don't have relationships with prop firms, and yeah, it's uh, for most people, especially when you're starting out. Don't worry about getting funded or anything like that. You need to be worried about learning skills. Once you learn skills and you're able to prove your own performance, then if you want to get funded, go ahead and you'll have people beating a path to your door. But until you learn how to actually trade, the prop firm stuff could come later. Another question from Jawei. If you have 5 positions, each position place 3 OCO orders. There are 15 OCO orders then, right? Yeah, I think that math works out. Yeah, that stands to right. So I would place the first one. First one gets placed with a buy stop limit, and then there's two. I put 2 OCO orders. You could do three if you wanted to, but there's the initial buy stop, and then I have 2 OCO orders connected to it. So yeah, there should be 15 overall. Let's talk about post analysis. So post analysis has both skills, right? You can't do post analysis without journaling, and if your journaling is poor, your post analysis is going to be poor. Your post analysis is only going to be as good as your journaling. Now, a lot of people journal and they skip post analysis. Right? You took all these great notes, but if you don't go back and review your notes and try to continuously improve, then you're leaving a lot on the table. And that used to be me as well. It really is step two of continuous improvement. There's some tactics and tools and even intervals for effective post analysis. So let's talk about intervals first, right? So with intervals, how often do you want to do a post analysis? I think that you should do a post analysis every single week, right? Every week, review the week. Every month, review the month. Every quarter, review the quarter. You get the idea. In that way, you're going to be able to one, build habits. Two, you're going to be able to generate a lot of awareness. And from that awareness, you're going to be able to start to make adjustments. Very important. So, how do you do this post analysis work? Well, I'll show you a small snippet of my spreadsheet here, and I'll make my face a little smaller so maybe you could see some of the data here, right? But the data itself isn't that important. The thing that is important is that you see that there's a bunch of trades over here. There's notes on the trades. I have my entry and my stops and my targets and the sizing. I have all that stuff in there. So how do you do your post analysis? What you want to be able to do, and I'll make my face bigger now, is you want to separate out your winners from your losers, whether you are doing this for the week, for the month, for 3 months, 6 months, a year. Separate out your winning trades from your losing trades. Put them into two separate buckets. Then from there, you're starting out with the winners first. Going through all your wins, you're going to start to see certain things that are common among them. They'll just jump out at you. Maybe you start to see a certain pattern, certain trade setup just repeats over and over and over again. Wow, this flat base that I was trading this year, that every time I traded that setup, it worked well. Maybe you learn, maybe you see that on the winning trades, there's certain indicators on your chart that are all lined up in a similar way. That's something you want to jot down. right? The way that you'll become aware of that is if you group the winners together and then you group the losers together. So you want to do the same process for both. You want to go through the winning trades, see what's common. You want to go through the losing trades, see what's common. And then you want to start to dig into some of the data here, right? And I talk a lot about it in the Trading Mind Wheel book, but when you start to see how many winners there are, how many losers there are, you could start to see too, well, how much money did I put into the winning trades? How much money did I put into the losing trades? How what was the sizing like? There's lots of data that you could dig into, but the general idea is that you want to see what's common among group A, your winners, what's common among group B, your losers, and then do more of what's working, less of what's not. It's really as simple as that. And all the tactics, all the nuances, we talk a lot about that in the Trading Mind Wheel, and we could do an entire live stream on that as well. Again, just the basics for now. Questions on any of that? Trying to pick things up and move along. We're already at the hour mark. Plan to go for 90 minutes today. We'll see if it goes 90 minutes. Or if we end up going over. If we go a little bit over, that's okay. All right. The eighth essential skill for trading mastery, testing. This one is one that I disregarded for an extremely long time. Testing. Well, I didn't even know what testing was. I thought that testing was just about back testing. No, there's factor modeling, there is back testing, and there's also forward testing. Let's talk about each one of those. So, what is factor modeling? Factor modeling is basically what William O'Neill did, if you're familiar with him. What he did was he started to notice some things happening. Right? He started to notice certain patterns in the market, and he wanted to go back and see, well, what were some of the big boys doing? Well, what was Fidelity doing when they would buy a stock? Well, what he noticed was that they would tend to buy when stocks were near their 52-week highs. Interesting. So we started to see the patterns there, right? Like, so we found somebody that he wanted to model, right? Back to modeling. Then he went back into history and started to find all the instances of stocks that had similar qualities, right? So stocks that are breaking out into 52-week highs, stocks that had certain fundamental characteristics as well. He developed Can Slim based off of that. That's what factor modeling is. You're not trying to reinvent the wheel. You're not trying to go in to some software and say, "Oh, what's going to give me the best return?" Right? Oh, look, a moving average crossover. No, it's not about that. It's not about that at all. It's about taking a look at what works and then trying to reverse engineer how did it work. That's what O'Neill did. That's what I did. That's what Minervini did. That's basically what every successful trader eventually does. Take a look at what works, model it, and then you end up making it your own. So if you have factor modeling, why do you need back testing? You need back testing for a couple of different things. What I like to use back testing for mostly is when I do my post analysis and I start to come up with different ideas, right? So, a relatively recent idea, share this one in the book, is how can I cut my losses faster? How can I get my stops to break even faster? Well, to do that, I want to ask myself some questions. Question that I asked myself was if I took a look at my biggest winners, what were some of the common factors among the biggest winners where I could get my stop to break even without getting shaken out of it? Pretty specific question, right? So, what I started to notice with those, and I'll share it with you right now, is that the ones that had the biggest moves tended to share these three common factors. They held the 10-day exponential moving average, they held each prior day's low, and they each held above either a whole or a half number, meaning like if it's a $100 stock, it's holding above $99.90. And so with each one of those three in play, I was able to progressively raise my stop and be in my biggest winners 95% of the time. It was only 5% of the time that I would be kicked out of a big winner. What that ended up doing overall was saving me about 20 R multiples, 20 times my risk over the course of a year. That's incredible, right? Wouldn't you want to do that? Well, the way that you're going to be able to do that, journal well, do your post analysis, and then have ways to go and back test. And so that's what this spreadsheet is for. That's how I like to back test. I like to go through my trades, put them into a spreadsheet, and then starting to play around with all these different what if scenarios. I think the one that I have here is a screenshot from how I wanted to start testing different scale out strategies. So all different kinds of ways that you could back test and do that sort of exercise. Well, if you have factor modeling and back testing, what's forward testing? Forward testing is what many people start off doing and they don't realize that they're doing it. You learn something, you put some money in and see how it does. That's forward testing. It's not the best kind of forward test that you could do, right? You just hear something on the internet, maybe you're listening to this and it's just like, wow, that sounds amazing. I'm gonna go try this out and throw some money into it and see how it works. That would be a type of forward testing. Is that the best type of forward testing? No. No. Well, what the way to do it, it's actually in this order here. Step one, factor model. Reverse engineer what it is that you're doing. You could learn from somebody else and learn what factors they did. And then you could start to back test it by actually going to a chart and seeing how this worked and follow along. So that way you could get a little bit of a feel. And then you could forward test by putting a small amount of capital into it. An amount of capital that's small enough where if you were to lose the entire account, it would not hurt you. Maybe it stings a little, but it does not hurt. That's how you forward test. All this stuff comes from our beliefs and it's all interlinked together. So, everything in the mind wheel is all connected. You can see how each piece kind of bleeds into the other ones. Throughout the whole presentation, we were talking about how you need there's mindset for everything, but you journal, and then how you do your post analysis is going to be predicated on your journaling, and then from your journaling, you'll start to see, oh, if I analyze this way or if I analyze that way, that you're going to have awareness of how you should size, how you should manage your trades and your risk, all these things. It's all comes together in one package, right? Like you can't really have one thing without the other. If you have a wheel with a few spokes missing, you're going to be riding your bike. There's a few spokes missing. You're going to crash into the bush. You don't want that. You want to have a full wheel, fully inflated tire. That's what this is going to give you. That's why mindset is at the very beginning of all this. Now, to dive deeper into these concepts, I recommend getting the book. Get the book, The Trading Mind Wheel. It's available on Amazon. There's lots of other places where you could get it. It's also available as an ebook. You could get it on Kindle. It's available as an audio book. You could listen to it. And of course, you could get the hard copy. So go grab the Trading Mind Wheel book and you'll learn far more and go far deeper into everything that we discussed here today. Now, for those of you that want to go deeper and work directly with me, we've got an avenue for that. We've got the Mara Elite Premium Program. Here's a few points here. Some of the things that I've heard that set us apart. Our comprehensive training. We go through everything that we just talked about in the book. We have a large suite of videos that walk you through every single step, but it's far more than that. It's not just here's some video courses and good luck. There's direct mentorship, there's direct coaching with me and our other coaches inside the program. And it's not just text, it's not it is on Discord, right? I love Discord because you could talk on the desktop, you could talk on your phone, but you're able to chat with people and you're able to chat with people live, not just with text, but you could do it with voice too. And we meet twice a week, every single week, and the microphones stay open and we're able to have real conversations together. I share every single thing that I do ahead of time. I share my full trade plan. I share my analysis. I share it real time in the chats. I share it real time when we meet and we're doing our weekly masterminds. The next mastermind is tomorrow. If you join, you'll be able to be a part of that. But I'm also sending out my analysis and my full trading plan the night ahead of time, right? So for today, members got it Thursday evening. All my thoughts and my analysis and what I was planning to do today. So all that's there. Took a took a trade in CrowdStrike, and I gave my plan, and we'll see how the market treats that trade and what parts, if I'm going to stick with it towards the end of the day, or if I need to make an adjustment. All those plans were given ahead of time, and we'll be talking with the Discord group after this, all the other Mara Elite members. But what you're getting is the group coaching calls twice a week, access to the private community on Discord, and I've heard so many people say that it's more like a family than it is just like a community. Everybody is super supportive. People provide feedback to one another. It truly is amazing, and we're looking to do many, many more great things in there. There's the Mara University. There's Pro Tools. So you're going to get my journal, that spreadsheet. You get access to it. You get your own version of it. It evolves as I evolve. So you always get the latest version of it. And then you get my research too. So if any of that interests you, go to marawealth.com/premium. Uh, Sherry says, "Is there a free section in Discord?" So if you just buy the app, if you go and get the app, yeah, the app itself is free. You don't need to pay anything extra for the app. But as far as our community, that's just for premium members. And then lastly, for anybody that just wants to stay connected, join the marawealth.com newsletter. This is free. And every single week, I'm posting free educational content in the newsletter. I'm giving out a trade ideas watch list for the week. And there's a lot more content inside the newsletter as well. So make sure, at the very least, you're on the newsletter. Go to marawealth.com/newsletter to get onto the newsletter. And that is the end of it for today. Let me know what questions you guys have, and let's take a look here. I'll scroll through YouTube and Meta and X and all these and see what questions you guys have. Darren, great comment from Darren. Darren says, good to see you. Mike's group has transformed my trading tremendously. Much thanks for the connection. Yes. Thank you very much. And yeah, thank you for the referral, Trader Help 101. Let's see what are the questions that we have here. I believe there was a question earlier about crypto. Let's see. Question from Jawei. How do you trade crypto recently? Feel that it's so hard to trade it. The way that I trade crypto is I trade it more on the intermediate to longer term time frame. I don't really like to trade crypto as a shorter term swing trade. And the reason why is because it's a 24/7 market. And the way to manage a trade in a 24/7 market, that means that you're going to be subject to a lot of the the available brokers, right? So I use Coinbase. Interactive Brokers just hooked up with some other crypto platform. I believe it's called Plaxos. So you are able to start to put in some more of these conditional orders, so you don't have to be in front of the screens all the time. But what I've seen so far is that there's still it's crypto is still more akin to the Wild West than stocks. And so you could have wide swings, could have a lot of slippage. And for those reasons, I'd rather not do short term trading for crypto. I prefer more the long game. So, as far as crypto goes, let's see where crypto is at now. And so here is crypto, and I'll make this a little bit bigger here. Okay, so I bought Bitcoin. I bought Bitcoin down here. This was the main entry, but I was also buying Bitcoin uh, throughout here, right? Just adding little by little by little by little. And then I'm also looking to use technical analysis for trading it, crypto as well. And so I saw Bitcoin tracing out this descending trend line here. I saw it form this pattern over here, and I saw it tightening up right there. So how do I do all that? Multi-time frame analysis, right? So on my charts, and let's reset this one here, reset this one. So I like to keep my charts with the monthly time frame, the weekly time frame, the daily time frame, the 30-minute time frame, all on one screen. And so that lets me zoom out and start to see how trades are developing. So for something like crypto, where I'm bullish on long-term thematic crypto, I'm able to add little tiny bits and pieces over here, and small enough where if it does drop significantly, I'm not that worried because I'm using different strategy than I am for trading stocks. I'm doing dollar cost averaging in here. So I'll add a bit, add a bit, add a bit. Oh, look at this. It's starting to evolve over here. Okay, it's pulling back into that line over there. That's a 200-day moving average. Now some of the technical analysis that I love for stocks can start to come back into trading crypto. And then let's put the annotations on. And oh, look at this. There's this descending trend line coming down over here. Oh, that's interesting. Right as we're coming around the 200-day moving average or the 10-week line and the 40-week line down here. And it's price is contracting and contracting and contracting. So let's put on some more here because the risk is so tight. For Bitcoin, 5.5% risk, that's not a lot for Bitcoin. And so this ended up moving 66, 70% or so over what is that? That's from October to about now. And now it's still holding the 10-week line, so we'll see what happens. But that's in a nutshell, that's what I do with crypto. See what other questions came in. Scrolling up here through Instagram, see what questions the Instagram folks have. And also, while I'm scrolling through Instagram, if you guys over on Facebook, LinkedIn, YouTube, Twitch, X, or Rumble have questions, go ahead and type them in. I'm looking at all this stuff. All right, here is a question from Instagram. The Ultimate Contrarian asks, someone having little experience in other market, and if they want to start forex trading, then what should be the ideal starting amount? Good question. So the ideal starting amount is the same thing, whether it's for forex or whether it's for stocks or whether it's for crypto or baseball cards or whatever. When you're just starting out and you're starting to put some money to work, you want it to be the amount that if you lost the whole thing, then it's not going to harm you. But it should be enough that you care at least a little bit about it. It should sting just a little if you did lose the whole thing. That way, some of the psychology, some of the emotions are at play with that money that you're using. That's how much you should use. That amount is going to be different for everybody. What other questions you guys have? Someone else asking about giveaways. You guys really like the giveaways, don't you? If I were to give something away, what would you want? How about that? Yeah, if you tell me what you want me to give away, then let's have the conversation. But there's lots of things that I give away. Most of what I give away is free education. Aside from this, go to mariwealth.com. There's loads of information there. There's free guides. There's free tools over there. We're building a community. Get onto the newsletter. Write to me when you're on the newsletter. I respond to emails. That's what you get. That's what you get for free. That's what I'm giving away. Where could you get the slides? Very good question. I should have thought about that. You know what? How about this? Get onto the newsletter. Get onto the newsletter. Go to mariwealth.com/newsletter. Right, we'll go back a slide. mariwealth.com/newsletter. For those of you that get onto the newsletter, I'll send out the slide deck later this weekend. That's how you can get it. I'll send it out as a PDF for you. Some people commenting on journaling and how it sucks, but we need it. Yeah, that you're absolutely right. That's from William Wright over on Instagram. Journaling's extremely important. Satish talking about psychology and how journaling is important for psychology. It is. I've heard journaling described as praying on paper. We're literally getting the thoughts out of our mind and onto the page. And what that helps us to do is to look at it far more objectively. When it's in here, sometimes it could be difficult to be objective. When we take it out of here and we put it on the page, we could then come back to it, take a look at what's on the page, and be far more objective about it. Because when it's we're literally taking the internal and making it external. Lots and lots of exercises like that in the book. So if you're new, if you liked what we spoke about here, get yourself a copy of the Trading Mind Wheel. It will help you tremendously. And I think we'll leave off with that. So I want to say thank you so much for joining us today. It's been a real pleasure. We'll be doing live streams like this throughout the year. So make sure, if you're not already subscribed to the channel, make sure that you're subscribed wherever it is that you happen to be watching this from. Set your notifications on, get a copy of the Trading Mind Wheel book, and I'll see you back here next week. Take care. Much love. Peace out, everybody. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.